the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
Bitcoin has hit an all-time high, paused for a breather, and now it seems poised for another lunge upwards. What's different this time is the number of companies holding Bitcoin as an alternative to anything else out there. A total of 134 entities now own more than 15% of all Bitcoin that has been mined, and the figure's growing at a steady clip. So are we looking at another leg up in the Bitcoin bull market as we head into the second half of the year? And if so, what are the best projections? Well, I think we'll find out in a minute. Another story that caught our attention in the last week was the emergence of Ethereum as a reserve asset. A publicly traded company called SharpLink Gaming announced it would invest $425 million into an Ethereum reserve, much like MicroStrategy founder Michael Saylor has done with his huge haul of Bitcoin, or 580,000 of them. And then there's the unstoppable rise of Bitcoins, now worth $250 billion. And all of this has just happened in the last 5 years. Well, to help us make sense of all of this, we're joined by none other than OVEX CEO John Ovadia. Hi, John. Thanks for joining us once again. It's good to talk to you. Let's start with Bitcoin. It broke new all-time highs above 2 million rand. That's of particular significance for South Africans. $110,000 in US or international terms. What's driving this, in your opinion?
Yeah, sure. Thanks for having me, Kieran. Super interesting, exciting times for crypto. I think the main driving force here with Bitcoin and what's been driving Bitcoin is kind of the Trump administration. The Trump presidency has been incredibly bullish for crypto. His first order of business, get rid of Gary Gensler, the CEO, who's was a very corrupt kind of political self-interest peddling bureaucrat, Gary Gensler at the SEC, who was filing lawsuits against Coinbase and Kraken and pretty much every respectable crypto firm for no good reason. So Trump admin came in, got rid of Gensler, huge kind of vote of confidence for the crypto industry. On top of that, you have Trump's son, Eric Trump, launching a crypto project, USD1. I don't know if you've seen that. It's $2 billion stablecoin already. You have kind of Trump putting an end to Operation Choke Point. Operation Choke Point was an orchestrated US kind of operation to cut off dollar banking for crypto and other kind of high risk or undesirable industries, such as kind of adult content, gaming, crypto being one of them. So I mean, all of these are very bullish developments for crypto and just kind of taking off the shackles of bureaucracy of crypto and allowing it to flourish, or giving it the opportunity to flourish. And that's really what's behind the latest push from 70,000 when Trump took office to now 105, 110,000. On top of that, like you mentioned, you have the kind of Michael Saylor type operations, and I guess we'll get a bit more into that just now.
Yeah, I mean, do you see Bitcoin continuing its bull run in the second half of the year? There's a lot of debate about it. It seems to be, from a technical point of view, lining up for some kind of push forward. It hasn't quite happened. Some of the projections out there are quite astonishing. Some people saying, $150,000 by the end of the year. Some, I've even read this morning, $250,000. Okay, I mean, that's in the realm of speculation, but do you see the bull run continuing?
Yeah. I think short-term price movements are always tough to predict. I think that, it could definitely go either way in the short term. The next 6 months, we go up, we go down. I think it's very likely going to go up again, driven by kind of that, not momentum shift, but sentiment shift from kind of the US presidency. Again, that kind of lift on regulation just opens up many opportunities for crypto to flourish. Bitcoin and crypto as a whole is at a small percent of its true potential. If you look at Bitcoin compared to gold, the gold market cap's around $20 trillion. Bitcoin's around 2. So just to be equal to gold, it's got another 10x in it. That's $1 million Bitcoin. That's just equal to gold. Bitcoin's a far superior store of value to gold. It's a far superior way to move money compared to gold. Try moving $1 trillion of gold. It'll take ships and it'll cost you probably billions of dollars to move. Try moving $1 trillion of Bitcoin today, obviously half the market cap, not easy. But if there was a $20 trillion market cap and a country needed to shift $1 trillion here or there, it costs you $50 to move $1 trillion in value, which is insane. It costs you close to nothing to store $1 trillion of value in Bitcoin. So again, Bitcoin is like a far superior store of value to gold, a far superior means of kind of transferring value compared to gold, and is right now just at a mere 10% the market cap of gold. So if it equals gold, you can see $1 million Bitcoin. If it far surpasses gold, which I think it could, you could see a $10 million Bitcoin price at some point. Within the next 6 months, whether it goes up, down, or sideways, I think most likely up, but again, it's anyone's guess.
Right. You mentioned the positivity that came with the Trump presidency, and he has taken a much more pro-crypto approach. David Sachs, who, by the way, was born in Yeovil in Johannesburg, is his crypto czar. And, you can catch David on the All In podcast every week. He's pretty knowledgeable and he's pretty connected. But I think there's a lot of other positive news as well. Let's talk about SharpLink. I mentioned at the beginning SharpLink Gaming. It's pretty amazing. They're investing $425 million into an Ethereum reserve. So Michael Saylor, he became the largest or most famous evangelist for Bitcoin because of the Bitcoin reserve he put in place for MicroStrategy. So if you wanted to take a leverage bet on Bitcoin, without having to custody Bitcoin itself, you could buy MicroStrategy shares. And I suppose SharpLink is trying to do pretty much the same thing with Ethereum. Do you see this as a trend that it's going to spread to other cryptocurrencies? There are 20,000 of them out there. Clearly, a lot of that's rubbish. But I think some of these might be fairly interesting for other people to look at as a reserve potential.
Yeah, so it's hard to say. Another notable kind of event in that regard is Trump Digital. Trump's publicly listed digital media company has adopted a Bitcoin strategic reserve strategy, converting their cash balance sheet into Bitcoin. Again, like you said, it's been a very, very profitable strategy for MicroStrategy, essentially offering their shareholders leveraged Bitcoin exposure. And now we're seeing it happen more with Ethereum. Will we see other companies doing it with different crypto assets? Hard to say again. I think there could be some room there. I don't think it's a sure thing with other crypto assets. I think most crypto assets at this point are speculative outside of kind of Bitcoin. Even Ethereum is somewhat speculative. Bitcoin and stable coins have a very, very clear use case. I'm not saying there's no room for other crypto assets, and there definitely is. A lot of innovation can be had, but putting them on the balance sheet of a company that's not in crypto and has nothing to do with that specific cryptocurrency, I think would be a purely speculative play. Something that could benefit shareholders, but won't necessarily benefit shareholders. I think the Bitcoin treasury strategy is a very, very good one. A very, very strong strategy for companies who won't need cash in the short term. As previously mentioned, Bitcoin is right now sitting at a mere 10% the market cap of gold. So a lot of upside still for Bitcoin. I'd say quite limited downside. There's not many existential risks that currently exist for Bitcoin, which can't be said for pretty much any other crypto asset, including Ethereum. Ethereum's a very strong asset with a very strong ecosystem, but Ethereum at the end of the day has a use case. It's a smart contract platform. The biggest use case previously was Tether, the US dollar stablecoin. Tether was based on many blockchains, but Ethereum was kind of the biggest. And you see that volume of Tether slowly moving to other blockchains, faster, cheaper, somewhat better blockchains, such as Solana, such as Tron. So Ethereum has got real competition, I think, from different blockchains. Still is the biggest name, still is probably the safest, still has the widest DeFi ecosystem. But you do see that Ethereum missed out on the kind of the meme coin boom. All the meme coin trading happened on Solana, and Ethereum, sorry, not Tether, Ethereum completely kind of missed that train. And that could happen again with Ethereum. I think Ethereum, great asset, very interesting, early mover, early adopter, but not super innovative. The move to proof of stake was somewhat innovative, but not super innovative compared to Solana, for example, or some of the other really interesting blockchains. The Telegram has launched a blockchain called the Ton blockchain, or is very closely associated with that blockchain. Could be very interesting if they integrate that deeply into the Telegram messaging service. You see Sui, I don't know if you've heard of Sui, that's kind of run by the team out of Facebook, who left Facebook after the Project Libra was closed. So again, Ethereum has kind of a core utility, and that core utility is smart contracts. There are competitors to Ethereum that are doing a better job. So that is a somewhat speculative move. Bitcoin is a gold competitor. Bitcoin is built around a brand pretty much. It's built around adoption. It's been adopted by kind of some of the biggest companies in the world as a reserve asset. Tesla, SpaceX, MicroStrategy, to name a few companies that have Bitcoin on their balance sheet. Abu Dhabi has bought, I believe, around $400 million of Bitcoin on the sovereign balance sheet. The US is almost certainly going to, or said they're going to put Bitcoin on the balance sheet. They're also going to put some other cryptocurrencies on their balance sheet, which was quite an interesting move. But again, they're the US, they can pretty much do anything. You can take a bet, and I guess they're taking a bet on different smart contract platforms. But as far as digital gold, store of value, Bitcoin is the king, and there really is no second best for that use. Second best to Bitcoin is gold. So it's really Bitcoin and gold. So that's a very strong, safe bet. I think everything else is somewhat speculative, could have significant upside, but I would be surprised to see many companies adding Litecoin to their balance sheet, or frankly, even Solana.
Yeah, okay. So you touched on Tether, and I mean, what a story Tether is. The profits they made, I think it was $13 billion in the last financial year with 150 staff. It's just quite extraordinary.
Company, Tether.
It's clearly having to scale up. I do see that they're hiring people. But that, of course, has been a massive story in the crypto space. $250 billion now backed in stable coins. What was going on here? This was originally, a stablecoin was developed as a way for people so they didn't have to leave the crypto rail, the crypto space. You could speculate on Bitcoin. You thought, Bitcoin had reached a peak and you could switch then into a US dollar stablecoin. But it's become much bigger than that, a lot of different use cases.
Yeah, no, absolutely. Tether, incredible company. Like you said, 100 employees, $13 billion net profit last year. Just mind-boggling, to be honest. I mean, more than $100 million per employee net profit, which is obviously the most profitable company in history per employee. They definitely are scaling up. We see that. And just generally a very, very interesting story, that $150 billion of market cap. And the reason is that there is just a core demand. I mean, what is a stablecoin? A stablecoin is a dollar bank account in your pocket without KYC, without delays, without frozen transactions. What does it allow you? A stablecoin wallet, a Tether wallet, allows the average Nigerian walking on the street of Nigeria to have basically a Swiss dollar bank account. What's Bitcoin? Bitcoin is a Swiss gold bank account. Although it's not gold, it's Bitcoin. It's its own price. Tether, or USDT, is basically a Swiss dollar bank account, but better, because it's in your pocket, it's a numbered account, it can't be frozen, transactions settle instantly. If I send you Tether on Tron, it's settled in 10 seconds. And you have the Tether, and away you go. There's nothing I can do to kind of reverse that or take that back, which is really, really remarkable. As an average kind of person doing business in Africa, getting access to dollar banking is near impossible. If you're not a $10 million company, at least a $10 million company, many $10 million companies in Africa can't get access to dollar banking. But if you're not at least a $10 million business, you will not get a dollar bank account. And once you have a dollar bank account, when you're receiving dollars from your Nigerian bank account, you'll have questions. It will take you weeks. You could have your account closed simply because you're receiving money from Africa, which is considered high risk. And these are all fundamental problems of the global banking system. So Bitcoin was developed to kind of solve this problem, but it has a problem of its own, which is the price volatility. If you're a Nigerian business and you're trying to send money overseas, whether the value of the money you send is worth 5% more by the time it reaches its destination, or 5% less is a problem, right, for doing business. And that's where stablecoins step in. You get all the benefit of Bitcoin and cryptocurrencies. You get instant settlement, you get instant accounts without having to jump through a million hoops, where, again, unless you're like a $10 million company, you would never be able to open a dollar bank account where any guy on the streets in Nigeria can open up his phone and open up a Tether wallet, or basically a blockchain wallet and receive and send Tether. So you're getting kind of all this stuff, very, very, very low overhead. And you're getting it pegged to the US dollar, which is currently the world's global reserve currency, which is likely to continue for a long time until Bitcoin kind of steps into that.
You raise an interesting point there about the ease with which you can transact. You can dollarize your life with stable coins. As people in Africa, I think, are slowly beginning to wake up to this. You can convert your local currency into US dollars, crypto version thereof, and you can transact anywhere in the world at extremely low fees. If you look at the cost of remittances, if you're trying to send $200 from Joburg to Malawi, you're probably going to pay 20% or 15%, sometimes more in fees. Stable coins are coming in at like 1% or even less, 0.75.
Crypto trades at a premium in South Africa, 1 or 2%. Some African countries, it's 5 or 10%. Meaning that if you buy a stablecoin in, let's say, the United Kingdom, and you transfer it to your family in Nigeria, they can actually sell it for 5 or 10% above the bank rate. So not only is it instant, not only is it cheaper, you actually can make a net profit on the transfer. And the reason for that is simply that it's a liquid, unburdened currency. And for that reason, people are willing to pay more for it than they are for a US dollar that's stuck in a bank account that will take you 2 weeks to transact, 2 weeks to move, if you can even move it somewhere.
It raises other questions, and I think governments and central banks around Africa will be looking at this with a bit of concern because it's a way of bypassing the central bank and the banking system, transacting in a permissionless environment. It's a lot of discussion in the early days about network states around Bitcoin and the people who really want to establish, personal sovereignty and not have anybody breathing down their neck when they're trying to transact. What do you think stable coins, what kind of regulatory reaction will they get? And will these regulations actually work?
Yeah, so I think stablecoins will definitely be regulated. You see, Tether works with regulators all over the world. And Tether isn't 100% permissionless. If you steal $10 million of Tether, which has happened, exchanges get hacked. Bybit was hacked not that long ago. I don't know if you remember, you covered that. Tether worked with Bybit to very quickly freeze the stolen Tether. So Tether's not entirely permissionless. And they do work with law enforcement around the world to kind of monitor and police that to a degree. It's not like they're going to come freeze your money because you sent it to, let's say, some adult content website. They're not going to now freeze your wallet because they're not going to nanny it. But if you go and rob someone, and it's large enough, Tether are working with law enforcement to kind of freeze those wallets, and there is a way to blacklist the wallet. So for sure, Tether do it already. They're happy to kind of work with law enforcement, and I think that will just kind of improve as law enforcement understand crypto more and more, as they get more and more tools to understand crypto and understand what they need to even ask Tether for, or ask the stablecoin issuers what to do. They need to ask, we need to freeze a wallet. Most law enforcement don't know to ask that. They don't know which wallet to ask, but they don't know how to track the wallet. But all this stuff is very open, very transparent, and with the right tools, it's actually very easy. So for sure, that will be a growing trend, and as law enforcement kind of learn and get up to speed with crypto, that'll be more efficient, and we'll see a lot less cybercrime happening through crypto, through stablecoins, far less than you see through the traditional banking system, because that is a totally opaque system. You can't see what's happening in the traditional banking system. You can't see if someone steals $10 million or $100 million, where they sent it, how they sent it, where they're sending it after they sent it. Whereas with Tether, you can see it instantly. You can see the money that was stolen from Bybit. You can follow it. Anyone in the world can follow it. Anyone in the world can hop on Twitter and post, like this guy, Zach XBT, hopped on Twitter and post a whole expose. He has all the money, has all the flow of funds that was stolen from this exchange. Anyone can see it. Anyone can track it. And if law enforcement know what they're doing, they can reach out to the stablecoin issuer like Tether and say, hey, will you freeze this wallet? And they will happily oblige. You then have Bitcoin, the more permissionless side, which is totally permissionless. No one can block it. No one can freeze it. And that's kind of what's beautiful about Bitcoin. If you live in an archaic regime where they are trying to steal your wealth, you can live in Bitcoin. You can store your wealth in Bitcoin. The thing about Bitcoin, again, it's not pegged to any central bank. So it's got a fixed money supply. It's on a curve. You can see exactly how much Bitcoin there will be. There will only ever be 21 million Bitcoin. And that's also got many, many benefits of its own. Kind of, one, the ease of transacting, but two, the kind of anti-inflation, inflation hedge nature of Bitcoin. So I think Bitcoin and stablecoins have their own use case in different ways. Bitcoin will remain permissionless, impossible to kind of govern it, to censor it. You can blacklist or make exchanges. Governments can have databases of blacklisted or stolen Bitcoin, which will certainly become a thing. And exchanges, regulated exchanges like OVAX, won't support kind of blacklisted Bitcoin. If you send some Bitcoin in that was stolen, it's easy to track, easy to monitor, and we'll say, no. Obviously, maybe freeze it even. But guys who are dealing in this kind of shady, dodgy Bitcoin will have a hard time transacting in it. But again, will be permissionless, and no one will be able to freeze it. But you will see regulated institutions not willing to kind of transact in that Bitcoin. And that might result in kind of a two-tier Bitcoin system, one of like clean Bitcoin and maybe one of kind of maybe dirty Bitcoin that trades at a discount. You might see something like that emerge. But as far as stablecoins go, you'll always have kind of clean stablecoins. Stablecoin issuers are centralized institutions. They'll be always reporting to regulators in different jurisdictions. And those will be the biggest ones. You might have guys coming up with unique ideas how to have decentralized stablecoins. We've seen some interesting things over the years. But the best stablecoins are simply the guys like Tether, real asset-backed stablecoins with US dollars sitting in a bank somewhere. And those guys will always be fully compliant with some regulator somewhere, especially the big ones. I mean, you might have guys pop up overnight and disappear, but the big guys will always remain kind of proactive in that regard.
Yeah, I mean, permissionless in the sense of, you don't have to, when you do a transaction with your bank, you have to select a balance of payments code, and the whole thing gets frozen up in some kind of internal processing there before they forward it on to the recipient. Whereas with Tether, you don't do that. They can track it, of course, and stop it after the event. But that's the huge advantage. And of course, then you got the travel rule, which has come in, which, any transaction above 5,000 Rand, you've got to be, receiving it from a KYC, know your person who's been verified, know your customer. And this is a way of tracking, terrorist financing and money laundering and that kind of thing, which of course has come into effect now in the last few weeks. So presumably there's a lot more regulations on your side and compliance and reporting.
Yeah, no, absolutely. So we've recently pushed some updates onto OVX to be compliant with the travel rule. The travel rule is a bit of an interesting kind of financial regulation, especially in South Africa, where financial institutions actually don't readily share information of the sender. If you receive rands in your South African bank account, it's very difficult for you to determine where those rands actually came from. The only thing you can see is the reference. So I think that's an interesting thing. I think it would be very good if the South African banking system actually upgraded and allowed you to see where the money came from, who it came from. It would help prevent a lot of fraud. And it's a big challenge for companies dealing in South Africa, companies like OVX, to prevent fraud when you're unable to see where South African rands came from. The update to the travel rule now means that when crypto is sent out of OVX or received in OVX, we maintain a database and kind of communicate with the database on the other side of where that crypto is going to and where it's coming from. I think it's a very useful kind of tool in the arsenal of anti-fraud and fraud prevention. And I think things like that will continue to emerge. Again, that's the kind of regulation that will be able to govern the things like dodgy Bitcoin, stolen Bitcoin. You won't never be able to freeze it. Regulated institutions will be able to track it, monitor it, and kind of associate it with a warm body. So yeah, I think there's nothing wrong with the travel rule. I think that crypto can live very comfortably with the travel rule. I think that some fiat systems, like the South African fiat system, are actually more averse to the travel rule than crypto. And it's kind of a welcome change for crypto institutions to now maintain a kind of database of where crypto is coming from and going to.
Finally, John, tell us about OVX and your international expansion. I know that you're in a number of countries. You're talking to us from Tokyo. You certainly are getting around. How many countries are you in? What are your plans for the coming year?
Yeah, sure. We're in about 20 markets. Like you mentioned, I'm currently in Tokyo meeting some investors and potential partners out here. I was recently in Hong Kong and heading to the States next week. Again, mostly to meet with potential investors in the States. So we're doing a lot of interesting things at OVX. It's a very, very exciting time for us, and it's a very, very exciting time for crypto. Crypto is now being kind of adopted as a real financial asset. Like mentioned before, the stumbling blocks that existed, such as Operation Choke Point from the US, which was a coordinated attempt to kind of kill dollar banking for crypto. Such as the Gary Gensler at the SEC being fired, who was a very anti-crypto regulator in the US. These changes are putting crypto in the limelight and setting crypto up to become the kind of default financial rail of the world. Bitcoin, stablecoins, Ethereum, smart contract platforms are just the superior mechanism for storing and transferring value. Like very, 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 very big improvement. The difference between me sending you a stablecoin such as USDT or me sending you a US dollar Swift wire is quite literally the difference between me sending you an email or me sending you a mail in the post. The mail in the post will take days to arrive. It will cost a lot of money. It will could be damaged when it arrives, might never arrive, might require tracing because it hasn't arrived. Whereas an email arrives to you instantly for free every time. And that's literally the difference between crypto and stablecoins versus Swift and traditional financial rails. The difference of I send you a stablecoin, it will arrive within minutes, very close to free, or even seconds, very close to free, guaranteed every time, just like an email. If I send you a SWIFT to a dollar bank account that you give me, it may arrive tomorrow, it may arrive in 2 weeks, it may never arrive. Just the same way if I send you a note in the mail. And that is not even an exaggeration, that's the exact comparison that we see. Previously, crypto's adoption has been stumbled, again, by kind of hostile regulators who are hostile, frankly, for no good reason. Crypto is far more transparent than traditional banking systems, and it's actually far harder to be successful and cover up crime using cryptocurrency. So again, it's no good reason to be opposing it. With that out of the way, that really sets up the stage for crypto to become the default financial rail of the world. And we see that happening very, very first in emerging markets, and our specialty is Africa. We've seen OVAX as kind of the Coinbase or the Kraken of Africa. It's a place where you go to buy and sell crypto assets in Africa with your local currency. We've done that very well. We've built the biggest market maker in crypto assets in Africa. We do between $200 and $600 million a month of crypto to fiat and fiat to crypto transactions across Africa. We're currently regulated in South Africa, I believe Botswana, Australia, the EU, UAE, the UK, a bunch of other markets. And we're operating across probably about 26 countries in Africa, being the kind of Coinbase or Kraken of Africa. While operating in Africa, we've seen that, again, there's a huge, huge demand for crypto assets in Africa. Crypto assets in Africa do roughly anything between $1 and $300 million per day in crypto trading volume in Africa alone. When operating in Africa, we have a very close connection with these clients and understand the use case of this volume. And basically, no one is buying crypto to speculate in Africa. No one is buying Bitcoin in the hope that it goes up 5% and they can sell it in Africa. Sure, South Africa, there's a bit of that happening, quite a lot in South Africa. Outside of South Africa, basically zero. And that's where the bulk of the transaction is happening, or the volume is happening. South Africa is a bit of a different story. We have a very big kind of asset management hub and ecosystem. Outside of South Africa, there's none of that. Outside of South Africa, the financial rails for cross-border payments is basically non-existent as well. So people are buying crypto in droves, again, 100 to 300, maybe even $400 million every single day across Africa in order to transfer money cross-border. From, let's say, you got money in Nigeria, you need to pay your supplier in China. You have money in Cameroon, and you need to pay your supplier in, let's say, Germany. You have money in Nigeria, and you need to pay your supplier in Cameroon. All these transactions can be facilitated by crypto instantly. Whether the size is $10,000 or $10 million, it can be facilitated using crypto rails instantly across Africa. And we've been operating this. We've been providing liquidity on these local currencies to crypto and crypto to local currencies, again, on the order of $200 to $600 million per month. That's just the volume OVAX does as a market maker in these markets. But we've been providing liquidity on these assets, and businesses in Africa are able to use crypto to make these payments where they simply are unable to make the payments otherwise. Or they have to use some informal, weird, funny channel. So seeing this kind of use case and this opportunity in Africa, we understand that there's a need for essentially a neobank built on blockchain rails. And we think that this will be significantly better than any neobank, will be better than kind of Revolut, will be better than Monzo, will be better than N26, purely because it's built on the rails of the future. Those neobanks are very innovative in their user experience, and they do an incredible job. Revolut is really a phenomenal user experience, one of the best there is. But at the back end, it's built on traditional fiat rails. They buy currency through banks, they sell it through banks. They're all on traditional rails. What we're seeing the opportunity is to kind of rebuild that on crypto rails. What does that mean? That means, obviously, we still need to live in the traditional fiat ecosystem, and we sit at the intersection of essentially crypto and fiat. Taking fiat and allowing people to do fiat transactions, but benefit fully from the value and the benefits of cryptocurrencies. So, for example, if you sign up for OVAX, we're pivoting essentially from the Coinbase or Kraken of Africa to the Revolut or Monzo or N26 of Africa for now, built on crypto rails. And eventually we're looking at Latin America, Southeast Asia, and eventually Europe and the US. But for now, Africa is kind of our central hub, and Africa is the one who needs it the most. So, for example, what does that mean? If you sign up for OVAX, you'll get a local payments account. So it's a local named bank account in every country we operate in. You'll get a local payments account in Nigeria, in South Africa, in Ghana, Cameroon, Senegal, Kenya, Botswana, pretty much every major, Malawi, pretty much every major country in Africa, as well as the United Kingdom, where we've recently acquired a licensed payments company, an EMI, e-money essentially company. You'll get a local payments account in dollar, pound, euro, JPY. You'll get a local payments account in Hong Kong. You'll get a local payments account in Dubai. You'll get a local payment account in Australia if that's what you want. And you'll get all of those local payments accounts is the key word, a local account to make and receive payments in your name when you sign up for OBEX. So it's really kind of a revolutionary concept. And the next level, this is where the crypto revolution, this is where the blockchain rail steps in. You have all these local payment accounts. How do they connect together? And how they connect together is through cryptocurrency, through stable coins, and through blockchain. If you have money in Nigeria in your local payments account and you now need to pay your supplier in China, let's say, you instantly convert from Naira to USD in Hong Kong at the click of a button. That's T plus 0 second settlement. You request a quote, you click accept, and you have physical dollars sitting in your physical account in Hong Kong in seconds. And how does that work? You go from Naira locally to another counterparty who trades you to, let's say, USDT to USD in your Hong Kong bank account. And what we're doing is we're putting all these building blocks together into one product where clients can come and access all of this seamlessly without having to make those manual transactions. It all happens seamlessly, instantly, and for you. And it's really, really a totally revolutionary idea. It doesn't exist. It's not possible to exist. And on top of it, we're going to have a world-class user experience. We're going to have that Revolut user experience. Why can't Revolut come do this in Africa? Because they simply do not have the ability to convert, let's say, $1 million of Naira to dollars at a competitive rate. They don't have the ability to do that at T0. If they were doing it through traditional rails, one, they'll never get the dollar liquidity because the bank will say, sorry, we don't have dollars. Two, if they do get the dollar liquidity, it'll take them a week to transfer it from Nigeria to, let's say, Hong Kong. And three, once it arrives in Hong Kong from Nigeria, there's going to be a million questions about those funds purely because they arrived from Nigeria. Nothing more than that. We're going to be able to kind of cover every compliance requirement, but on top of that, allow a truly magical experience, one that doesn't even exist in the first world. You cannot get T plus 0 settlement or foreign exchange in the first world. You'll be able to get it in Africa through OBEX. And that's really what the team at OBEX is working incredibly hard to deliver. And there's no reason that we can't deliver it. The hard innovation that needed to be done is the innovation on the crypto side, the crypto liquidity, local fiat currency to crypto. That is something we have done. That is something we're the best in Africa at, and the best in the world on African currencies. And that's kind of the innovation that needed to take place. The next step and the step that we're building now, local payment accounts. We've done the hardest market. That's the UK. Again, I'm currently in Asia. We're setting that all up here, and we're setting that all up across Africa. This is stuff that's been done 100 times before, local payments accounts. It's not innovative. It's not special. It's a basic kind of financial infrastructure that's existed for many years and has actually done very well in many African markets, including Nigeria. Local payments settle instantly. T0, Naira to Naira. If I send you Naira from my Naira bank account to yours, it'll settle instantly. If I'm trying to now convert that Naira to dollars, it's impossible. So by combining the local payment rails, again, Kenya, you see very innovative local payment rails. M-Pesa, T0 seconds, instant settlement of kind of Kenyan shillings. Try send that money overseas, near impossible. So what we're doing is taking the innovation in Africa that's already been done, which is local payment rails, which has been done in a lot of Africa, not everywhere, but a lot of Africa, very strong local payment rails, combining it with the innovation of crypto, which is kind of borderless, permissionless money, and putting the innovation, we've been doing this for the last 7-8 years, making markets on crypto to fiat, to African fiat specifically, putting those things together, and you have something that, again, is truly magical. It's not just an order of magnitude better than the traditional system. It's 2 or 3 orders of magnitude better. It's a factor of 1,000 improvement on what's not even just what exists today, but what is even possible today using traditional technologies. So it's very exciting. It's very exciting for Africa, very exciting for OBEX, but we think that it can be very exciting for the entire world. And we think that this technology and this innovation is an order of magnitude better than the best people in the world, the best companies in the world, which is the Revoluts, the Monzos, the N26. If they don't make these changes, they themselves will be disrupted. And yeah, it's just a really phenomenal opportunity, and we're super excited to be so well positioned to execute on and to bring this to the world. And we think it'll be really special for Africa and make a huge difference to kind of the financial inclusion of Africa and allow Africa to flourish. Africa is the fastest growing population. However, Africans cannot interact with the world financially. It's simply not possible today, but it will be. And I'm very excited to see what that unlocks in Africa and then across the world.
It's an extraordinary growth story. When we first met, you were involved in crypto arbitrage, which you eventually exited that market, and you're now on the cusp of creating a world-breaking or a revolutionary type of neobank built on crypto rails. And we're going to follow your story with great interest, John Avadia, but we're going to have to leave it there. Thank you again from Tokyo for your time.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.